In today's video, I'm going to reveal something that only the top 1% of investors understand. It's something that turns everyday people into millionaires during the worst economic moments. And if you've been watching the signs closely, you already know what's coming. The 2026 market crash is no longer a question of if. It's a matter of when. The data, the debt levels, the interest rate cycle, the corporate earnings squeeze, and the global liquidity pressure all tell the same story. A major correction is loading. But here's the twist. While most people panic, sell off their investments, and lock in massive losses, the richest investors see the crash as the beginning of their biggest opportunity. They know crashes create life-changing wealth for those who prepare, stay calm, and execute the right strategies at the right time. And today, I'm going to show you exactly how to use the 2026 market crash to get rich. What to do before the crash, what to do during the crash, and what to do right after. So stay with me until the end because the strategy I'm about to share has turned ordinary investors into overnight winners during every major market downturn in history. And if you apply it correctly, it can do the same for you. Before we dive into the actual steps, let's talk about why this crash is becoming more predictable every month. The cycle is repeating. High interest rates are crushing consumer demand. Corporations are cutting guidance. Tech valuations are stretched again. And on top of that, geopolitical tensions and global supply chain issues are creating volatility not seen since 2020. Every crash in history has had a different cause, but the same outcome. The smart money gets richer, and the emotional money gets wiped out. That's why you need a plan before the chaos hits. You don't get rich by reacting. You get rich by preparing. Step 1 is understanding what cash truly means during a market crash. Most people misunderstand cash. They think holding cash means they're playing it safe. But wealthy investors know cash is not safety. Cash is optionality. Cash gives you the power to buy assets when they're 20, 30, even 50% cheaper. And during a crash, that optionality becomes priceless. If you're overexposed, if you're all in on high-risk stocks, or if your portfolio is heavily dependent on inflated valuations, the crash will hurt you. But if you have cash on the side waiting for the moment when everything gets marked down, you turn into a shopper walking into a store where everything is half price. That is how wealth gets built fast. So the first thing you need to start doing right now is building your cash reserve. Not selling everything, not panicking, but slowly reallocating from your riskiest positions into cash so you can strike when the time comes. Next is positioning your watch list. During a crash, you don't want to waste time figuring out what to buy. You want to already know what companies are high quality, fundamentally strong, and long-term winners. Crashes punish the weak but reward the strong. So build a list of companies with strong cash flow, low debt, real demand, and durable competitive advantages. These are the stocks that bounce back the fastest after markets bottom. Look at the last 3 major crashes. The 2008 crash, the 2020 crash, the 2022 tech crash. The strongest companies didn't just recover, they exploded upward and created new millionaires. If you already know your targets now, buying them during the crash becomes effortless. Now let's talk about the strategy that actually builds wealth during the crash itself. This is where things get interesting. Because most people think the secret is simply buying the dip. But buying the dip is not a strategy. Buying the dip is what emotional investors do. What smart investors do is buy in waves. You never go all in at once. You buy small amounts as the market falls. Because no one can time the bottom. So you buy as it drops 10%. You buy more at 20%. You buy again at 30%. You ladder in. And by doing that, you guarantee yourself an amazing average entry price, even if you don't catch the exact bottom. This method has built more wealth than almost any other investing technique in history. It works because it removes emotion and turns the chaos of a crash into opportunity. But there's another layer to the strategy that wealthy investors use. While everyone else is panicking, selling stocks, and running to cash, the wealthy are buying cash flow assets. Assets that pay them even during the crash. Think dividend stocks, REITs, bonds, and high-quality cash-flowing businesses. When prices fall, yields rise. That means you can lock in amazing passive income streams during the worst part of the market cycle. Think about how powerful that is. While the world is panicking, your money is paying you every single month. That's how wealth is built. You're not just buying assets. You're buying income. And income is what sets the wealthy apart from the average investor. Now let's talk about fear. Because fear is what destroys most investors during a crash. Fear makes you sell low, buy high, and make emotional decisions that wipe out years of progress. But you have to learn to see fear differently. During a market crash, fear is actually a signal. It's a sign that opportunity is close. Every major market bottom in history was filled with fear, negative headlines, and people saying, "This time is different." But it's never different. The market always rebounds. And when it does, it rewards those who stayed calm and bought quality assets when everyone else was scared. That's why the ability to stay disciplined during the crash is more important than the strategy itself. Now let's talk about the mistakes that you absolutely need to avoid during the 2026 crash. Mistake number 1. Going all in on speculative stocks. When the market crashes, high-risk, unprofitable companies fall the hardest. Many never recover. This is not the time for gambling. This is the time for calculated, intelligent investing. Mistake number 2. Selling your long-term investments out of fear. If you're holding quality companies, selling during a crash guarantees you lose money. Let the crash run its course. Markets recover. They always have. Mistake number 3. Trying to time the bottom. No one can do it consistently. Not hedge funds, not institutions, not gurus on the internet. You buy in layers and you let the average price work in your favor. Mistake number 4. Ignoring cash flow opportunities. If you only focus on stock prices going up and not on assets that pay you, you miss out on massive long-term income gains. Mistake number 5. Not having a plan. When a crash hits and you have no plan, fear takes over. But when you have a roadmap, you stay in control. So now let's talk about what to do during each phase of the crash. Before the crash hits, build cash, reduce risky positions, tighten your watch list, and prepare mentally. During the crash, buy in waves, focus on high-quality assets, prioritize income-producing investments, and ignore the noise. After the crash, hold. Let your investments grow. Don't sell too early. Wealth is built by waiting, not by jumping in and out. And here's something most people don't talk about. The biggest recoveries don't happen slowly over years. They happen fast. The first 90 days after a market bottom often create more gains than the next 3 years combined. That's why being invested during the rebound is crucial. If you miss the rebound, you miss the wealth creation. Look at the data. Investors who stayed calm during the 2008 crash and bought quality companies saw massive returns in the next decade. Even investors who bought in the middle of the crash still came out far ahead. And those who bought after the crash began recovering. They became the new millionaires. Now let's break down the psychology of what's going to happen in 2026. When markets start falling, the news will go crazy. Headlines will be dramatic. Analysts will predict the end of the world. Social media will spread fear. Your friends and family will panic. But you, if you follow this strategy, will do the opposite. You will stay calm. You will buy quality assets on discount. You will stick to your plan. And when the market rebounds, you will be in the perfect position to profit. That's how the wealthy operate. They don't chase emotions. They chase opportunity. Let's talk about sectors. Not all sectors behave the same during a crash. Tech will fall hard, but the strongest tech companies will bounce back the fastest. Financials may suffer, but strong banks with solid balance sheets will recover. Energy and commodities may hold up better depending on global demand. Healthcare remains resilient during downturns. Consumer staples become defensive plays. If you understand sector behavior, you can position yourself more intelligently and pick the areas that will grow the most during the recovery. Now let's go deeper into timing. Because while you can't time the bottom, you can time the phases. The early phase of the crash is where panic selling starts. The middle phase is where valuations become attractive. The final phase is where fear peaks but opportunity becomes the greatest. Most investors quit right before the rebound. But that's exactly when you should be accumulating aggressively. This is where generational wealth is created. Let's talk about ETFs because ETFs give you diversification, stability, and exposure to entire markets. If you don't want to pick individual stocks, you can buy index funds during the crash. Buying the S&P 500 when it's down 30% has historically produced incredible long-term returns. Same with Nasdaq ETFs. Same with dividend ETFs. If you're a beginner, ETFs are your safest and smartest way to buy the crash without taking unnecessary risks. And now here's a step-by-step plan you can follow. Step 1. Build cash now. Step 2. Create a watch list of 10 to 20 high-quality companies or ETFs. Step 3. Wait for the market to drop 10% and start buying small positions. Step 4. Continue buying every 10 to 15% drop. Step 5. Aggressively buy once fear peaks and high-quality companies hit their lowest valuations. Step 6. Hold through the recovery. Step 7. Reinvest your cash flow assets for compounding growth. This plan is simple, repeatable, and historically proven. Let's talk about patience. The 2026 crash might last months. It might last a year. But the recovery will happen. History is very clear. Markets always return to their long-term upward trend. Every crash in history looks tiny on a long-term chart. And when you understand that, you stop fearing the downturns and start using them to your advantage. Now let's talk about wealth. Real wealth isn't built during calm markets. Real wealth is built during downturns. The people who got rich after 2008 weren't the ones who waited for things to get better. They were the ones who bought when things looked hopeless. The ones who bought during the 2020 crash made massive returns in 2021. The ones who buy during the 2026 crash will be the ones who win the next decade. And here's the truth. You don't need to be a millionaire to take advantage of the crash. Even small investments during a downturn can grow massively. Over time, a few $100s invested at the right time can turn into thousands. A few thousand can turn into tens of thousands. You just need discipline, patience, and a clear strategy. So as we get closer to the 2026 crash, remember this. The greatest transfer of wealth happens when markets fall, not when they rise. Crashes shake weak hands out of the market, but they reward strategic investors who stay calm and think long-term. Don't fear the crash. Use it, prepare for it, take advantage of it, and come out on the other side wealthier than ever. If you got value from this video, make sure you like, subscribe, and comment. I'm ready, so I know you're preparing for the opportunity of the decade. And remember, this is Stock Predictor, helping you build wealth through clarity, strategy, and smart investing. Stay focused, stay disciplined, and get ready, because your chance to get rich might be coming sooner than you think.